Hey, good morning, everybody. It's Andy O'Fee, the Yankee closer. It's a rainy, kind of dreary Thursday out there. Hey, thanks, Christine George, for my cool new haircut. And I've never had a kind of permanent, I don't know what you call it, whatever it is. It's pretty cool looking, though. So, anyway, Christine, thank you so much. Hey, so we had some pretty interesting stuff happen here in the last 48 hours. For those of you that have been watching the stock market and feeling a little bit uneasy about that, we saw stocks drop 600 points yesterday. They were up at 200 at one point early this morning. Now they're up 400 points, and we just have to be on the defensive in regards to mortgage rates when we start to see big volatility swings like that. And I'm going to show you what happens potentially and what to do to prepare your clients in regards to the movement in rates. Now, we did have some news overseas with the ECB saying that they're not going to raise their short-term rates, which is good, but there still is some inflationary pressure over there, which could flow over into our side. And for those of you who have been following me, we all know that any type of inflation is very, very bad for fixed income product, which pushes interest rates higher. Also, they are going to end their quantitative easing process, which is stop purchasing their treasury debt overseas, which we did for the longest time. And, with all that supply hitting the market, is that going to flow over? Now, that won't happen until January, but I just want you guys to be aware of the fact that when that does happen, is it going to push over into our market and put more supply away and then basically cause a push up in yields again as far as our treasury debt? So let's talk about this housing data that did come out over the last 48 hours. And some people are going to say, wow, the market's terrible. It's getting worse. It's getting worse. Well, there's no doubt about it that the market is slowing down. Let's be honest with each other. We had rates higher now for the past 8 weeks. And again, more supply actually hitting the market, which is fantastic nationally. And I think we can attest to the fact that we're starting to see more supply locally too. So that's great news. So the stinker number yesterday were new home sales, contracts on new homes. And it was a terrible number. There's no doubt about it. You can't shake your head about it. But in order to temper those numbers, you really have to realize the fact that a lot of the new homes that have been being built throughout the year, the demand has been great. So, the number was weak. So it is what it is. We all have to absorb that. And it's not something that we need to be concerned about. The market's not collapsing. There's not a huge hole in the floor and things are falling through. We also saw the FHFA number come in yesterday, and home prices on conforming loans were up 6.1%, and that's slightly down from 6.5% year over year. But again, look at the supply that's starting to hit the market. And again, we're getting into the seasonals. We're starting to see a little bit less demand for homes as we get into the holiday months, and higher rates are starting to hit the market too. So again, these numbers are not something to be overly concerned about. And like I said, I don't see the trap door happening. The market's not in a huge deceleration mode. It is slowing down. Hey, look, and you know what? It is what it is. So we're going to battle through that, and it's our job to talk to our clients and have that knowledge when they ask you that question, what's going on with the market? Well, here it is. This is what is happening. And the facts are that, hey, we're slowing down. Rates are higher. It is what it is. But, we're not going through an 06, 07 market again where everything is falling apart. Finally, after that, we saw pending home sales on existing homes, and that's a good forecast as far as what's going forward. And that number, again, was slightly lower than expected. Again, look at the supply. Again, the number may be slightly less, but again, the numbers overall are still very strong. And it's something that we really, really need to take into consideration. Now, let's go ahead. I'm going to show you something very interesting that I've been tracking and that I track with this website that I'm on all the time. And the data does not lie. Let's take a look at the S&P 500 and look what happens when it breaks through significant levels. I'm going to switch this over here right now to the S&P. And what happens is it's pretty incredible when you start to see the numbers break through significant levels. Now, this is the yield on the 10-year note. And once this pulls up, we can take a look at that. But, we got through the 10-year note here, this new number at 311. We kind of got through it. Now we have a new line in the sand. Again, back to 311. And then up here to 319 is the next level. Then any type of move up higher, we're going to be in trouble as far as getting to 325. But we haven't got there. Now, the real interesting chart, the S&P 500. This is really pretty phenomenal, and it's just a testament as to how accurate these levels are when you go to look at it. And you can see that when we break through significant levels and they hold, and then they break through again, and then it breaks through again, and this is a Fibonacci level, which is another way of tracking levels of support and resistance, you can see what happens. Boom, 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 down, down, down. Now today we're starting to see the market come back up, and this is where we have to be aware of the fact that, hey, you know what, S&P may bounce back all the way back up to this level, but hey, what happens when we get here? Is it going to break back up again, or are we going to test it and bounce back lower? At that point, we can start to see the move kind of getting away from us. So move down, good stuff for us. Move up, not good for rates. Treasury yields again pushing higher, but we're not really seeing any significant moves this morning as far as yields go. Overseas, the market did see some volatility. And then today, we're just going to keep our eye on the Dow as we go through the rest of the morning to see how things are progressing. If you have any questions, please don't hesitate to give me a call. Andy O'Fee, the Yankee Closer. Long video, but tons of data for you to absorb. Great tools and knowledge for you to share with your clients that are reading all of the news that's out there that's saying, hey, the housing market is in a downspin, it's decelerating, rates are higher, oh my gosh, it's terrible to buy a house. You and I all know that that's not true. Andy O'Fee, the Yankee Closer. I hope everyone has a great afternoon. Please contact me with any questions. See ya.